good afternoon, ladies and gentlemen, and welcome to our next video in the Admiral Markets Trading Spotlight webinar series. And here we are today to talk about an introduction to Guppy Moving Averages. It's great to have you all here today. It's great to have such a fantastic turnout. We appreciate here at Admiral Markets that we've been living through somewhat tumultuous times. We hope that you and your families are all safe and well, and we really appreciate you spending this time coming here, using this time to learn more about trading and financial markets. And so we've got a great session for you today, which will also end by a switch across to the live market. So be sure to stay with us throughout the webinar. If you have experience of using Guppy Moving Averages, well then that'd be fantastic. Please just drop that in the chat box, okay? Or if you've got your own experiences and you're watching this later on demand on our YouTube channel, then by all means just give us a like and put in your own thoughts and comments. It'd be kind of just an interesting take on the room here, just to hear, just quickly put into the chat box, how many of you in the room here have heard of Guppy Moving Averages? How many of you actually have ever used Guppy Moving Averages? That would be kind of useful for us to know. So Ronald says that he's used it a little bit. That's excellent. So and Anthony and Fernando, they say never heard of them. Okay, so it's Bress has not heard of before and stuff. So so there's quite a broad spectrum of experience. We do realize here that I have a wide range of experience of people who join us, okay, from complete beginners to very experienced traders, and we'll be able to sort of have a conversation that will hopefully help all of you along as we talk today. But it's great to, and Philip says the first time I've ever heard of Guppy, and Robert says never before. So this is what we'll look about. So there's plenty for us to cover and talk about. So we're going to talk about, well, what are Guppy Moving Averages, and we'll talk about how are they displayed on the charts, how do we interpret them, and how do we trade them using the Guppy Moving Averages. And then what we'll do based on our time commitments is that we'll have a look at Guppy Moving Averages in the live markets. I think that always helps us to be able to just flick across to the Admiral Markets MT4 platform and actually see the sort of the ideas and concepts discussed in real time on the actual platform. So for those who don't know me, my name is Paul Wallace. I've been trading for many years, okay, coached many clients, worked across the broad range of trading activities. Primarily, I'm a trend trader for the sort of longer term trading and a mean reversion reversal trader for shorter term intraday trading. And here we are with Admiral Markets, okay, who provide a wide range of financial instruments and have, as you can see there, they have a truly global touch there, with licensed and regulated across a wide range of regulatory environments, providing you competitive spreads and the ability to engage with the markets using MT4 and MT5 platform. And if you have any more questions about Admiral Markets, please get in touch with your account representative, and they'll be very happy to help guide you. So, but let's have a little talk about Guppy Moving Averages. As a few of you there kindly sort of included in the chat box, there's a wide range of experience from people who have used them to people who've never heard of them before. Well, as it says here, for many new traders, we know that, moving averages are a simple and popular indicator. And we recently discussed moving averages in depth and why they're popular and how to use them. So if you are brand new to trading and just trying to still even grasp understanding what a moving average is, then please, I can definitely recommend that if you go and have a look at the Admiral Markets webinar archive, you will find that there are, in fact, there's quite a wide range of fantastic educational webinars in there, but we very recently did one on a sort of a deep dive into moving averages, and I think if you'll go back and watch that, will help you just in your trading knowledge and experience anyway. However, there are a version of these moving averages that are called Guppy Moving Averages, sometimes GMMA, as we'll discuss, and they're rarely understood or rarely sort of seen very often. So what we're going to do in this session is we'll just take a bit of an introduction to Guppy Moving Averages and discuss how traders could use them in their own trading endeavors. And hopefully what you'll find is that, you know, as we discuss the topic matters, maybe you'll get an idea of how they could be very useful for new traders, okay? For people who are new to trading, it might just help them. And what I'll do is I'll share some of my own experience and see how that could actually be used to help you in your own trading choices. So, you know, I'm not going to go massively into moving averages because, as I said, there's a great webinar in the archive section there. But I appreciate there are some people here joining us for the first time and still news. And, you know, a quick recap of a moving average is it's a visual indicator that you can see on the chart there. In this particular case, the blue line is what we would call a 10-period moving average, or you'll hear traders just talk about it as a 10 MA, okay? And all that really has done is that every time a candle closes, the sort of platform will effectively take the last 10 close, okay, the last data of the last 10 closes, add it all up together, and then take an average of that, and then plot that as the updated moving average line on your chart platform. So, of course, the shorter the number, like a 10-period moving average, is very close to the price action because it's only taking the last 10 periods of data, whereas a longer term one, like a 200-period moving average, you know, has a wider, you know, it's kind of a wider move. It moves much less slower compared to the price because of the amount of data that is included in it. So, what makes moving averages popular? As I said, you know, we talked about this in depth, you know, quite a while back, okay? Is one of the things that makes moving averages very popular, especially for new traders, is that they are a visual trading tool. And as most traders are male, okay, or have been in the past, most males are driven by visual cues. So it allows traders to very quickly view and understand smoothed out data on, you know, on the charting platform, instead of trying to understand all the OHLC data for each particular bar or candle. It allows you to just use the moving average to sort of almost smooth out the data and give you a visual representation of what is going on those charts, and that can help confirm the sort of trends and momentum that may be there in those particular charts. And it can also be used to confirm reversals in markets. And we talked in a little bit of detail about how you can use particular moving averages to help you confirm reversals. And they can also be used as a guide on where to place trailing stops. So, you know, we can utilize, you know, sort of medium-term moving averages as a place for you to put your stop losses behind and then trail that in line with the trend of that particular trade. And also as a place to enter into trending markets, and you know, all of these kind of reasons why you know, moving averages are popular, they kind of also carry across towards Guppy moving averages, and we will discuss that a little bit more in depth in a moment. So. What we will look at doing here then is, you know, what we want to look at is we want to have a look at Guppy moving averages. And, you know, what are Guppy moving averages? So, as I said, a couple of people here in the room are aware of it and you know, and know of that. But realistically, what are Guppy moving averages? It's a collection of multiple moving averages used to identify changes in trends, possible breakouts, and also possible trading opportunities. They're quite often sometimes known as GMMAs, okay, and they're named after an Australian trader called Darryl Guppy, okay, hence the name of Guppy moving averages. So what is it that makes these moving averages a bit different? What is it about them that makes them a bit useful? Okay, how can we actually sort of utilize them within our own trading maneuvers? Well, here is how Guppy moving averages are made up. So the Guppy moving averages are applied as an overlay onto your price charts, and they are made up of two sets of moving averages. And these moving averages are made up of EMAs, okay? EMAs, exponential moving averages. So we have a short-term group, okay, that's made up of 6 moving averages: the 3, the 5, the 8, the 10, 12, and the 15 period exponential moving averages. And then a longer term group made up of 6 MAs: 30, 35, 40, 45, 50, and 60 period exponential moving averages. So what you have is 12 moving averages in total, split into 2 sets. So if we just use the drawing tool here that we have, is that what we can see here is, let's just use the drawing tool, is that what we have here is, this is as price action has been moving its way up. What we can actually see is you can see the shorter term moving averages, okay? The ones much closer to the price, okay? So you have a shorter term, as I said, made up of those 6 MAs, 3, 5, 8, 10, 12, and 15. But we also have longer term, okay? A longer term set of moving averages, 30, 35, 40, 45, 50, and 60 period EMAs, okay? And they are all on exponential moving averages. So it is, as I said, 2 groups, okay? 6 moving averages in each, and just termed as both a shorter term group and a longer term group. And what we'll do is we'll have a little look, and some of the slides along the way, and also when we have a little look at live markets, to try and understand that in a little bit more depth and see how that how they work together to actually to sort of help us utilize them as traders. But as I said, moving averages are all about, it's about visual cues, and as we'll see on a few of the slides ahead, we'll see how they how the sort of Guppy moving averages can be used to help us with our trading. So here we have, this is, there's a bit of a chart here. Okay, this is a weekly chart on the Australian US dollar. So what we have here is, we can see that the price action, we can actually see here at the start, its price is quite consolidated, isn't it? It's just been bashing about here, okay? A very sort of just small sideways before we get a breakout. And then we can see that price actually sort of, there's quite a strong downtrend. And what helps us define that stronger downtrend is that here we have the blue are the shorter term, okay, Guppy moving averages. And we can see that they are very perfectly aligned, aren't they? They're also spreading out a great deal. And also that they are way below the second group of longer term, okay? The longer term Guppy moving averages. And hopefully you can see there exactly how that, that shows you that when you're having a good, long, strong trend, that this is just, especially the kind of longer term one, when you're seeing the longer term that is, in alignment, the moving average is starting to spread out, that's just a reflection, okay? It's just giving you confirmation that, we're in that trend, and that trend is continuing up until the very end, okay? The trend is your friend until the end, okay, when it bends. So, and we will look at that in a little bit more detail. But as I said, it's about a visual cue, okay? And this is where I think that for new traders, this is what can actually help them, because I recognize that I've been trading for many years, and so I have lots of skills, okay? I've trained from deliberate practice of being able to see trends and and see when there is no trend. But I recognize as a new trader, and we were all there at one point, we all started, at the same point at one particular time in our journey, sometimes trying to, recognize A, if there's a trend, and B, just understanding, if that trend will continue, okay, if that trend has actually got the legs to carry on. And I think this is where Guppy moving averages could be very useful to new traders, to be able to sort of just give them a little bit of a confirmation, a little bit of confidence that A, yes, we're in a trend, and B, this trend is continuing, okay? And that can be enormously helpful, I think, for brand new traders to sort of just see how they can utilize that. So, how do we interpret the Guppy, for want of a better term, as well? Quite simply, when the shorter term group of moving averages are moves above the longer term group, well, that it indicates that a price uptrend in the underlying asset may be emerging. So here we have just an example where actually the prices have all been quite tied up and aligned, but actually, as we can see, as price breaks out, and then actually the shorter term moving averages, okay, move above the longer term group of moving averages, that's just giving us an indication that we are definitely entering an uptrend. And subsequently on the opposite side, okay, all right, when a shorter group of averages move below the longer term group, well then it's not a surprise that we might be expecting a shorter term trend. And a little bit like here, okay, the averages are all together until we get a breakout, And then as you can see yourself, the shorter term moving averages, okay, not only have they moved beneath the longer term group of moving averages, but they're also spreading out as well, which is giving us, as I said, just giving new traders a bit of confidence that, okay, we are in a strong trend here, okay, and what I want to be doing is I want to be trying to trade with that trend. That's what we want to be doing. We don't want to be, when there's a new strong trend in play, you don't want to be fighting that, okay, which is sometimes what new traders try to do. They miss the breakout and the entrance into the new trend, and what they like to do is they think that they can effectively because they're annoyed or grumpy or frustrated that they missed the new trend, well then they start to try and pick the top and bottom. They start to try and project where they think the end of that trend is in play. But when you're getting a good, thorough, decent, proper, strong trend, well, you don't want to fight that, okay? You want to find ways to actually to get on board and to join that trend. And this is where the Guppy Moving Averages could actually help new traders identify these new trends and then be able to stay with those trends, especially when we get good, decent, long-running trends. And a little bit as we discussed earlier and mentioned there is that, when you see there's a lot of separation between the moving averages, this is just helping confirm the price trend in the current direction. Just, think about that. When we are seeing, okay, you can see it here in this particular short example, you can see those moving averages are all, even the shorter term ones are all spreading apart, and even the kind of the longer term ones, okay, we see here, they are starting to spread out. They're starting to fan out, okay. And that's only helping happening because that trend is in place, and that trend has, has strength and direction and momentum, and that's what we're looking to just try and trade with, okay. And this is what I think this is where the Guppy moving averages, as I say, can help new traders identify. Bosh, here we are into a new trend. But also, this is the opportunity for us to, this is the opportunities for us to, don't fight that trend, to stay with that trend, okay, and actually ride that trend for as long as you possibly can. So, in terms of interpreting and how you utilize it, well, not unsurprisingly, like all moving averages, the Guppy moving averages, they work best in trending markets. No, not really a surprise there for anyone who's traded for a while or used moving averages. When they are sideways, okay, and intertwined, then that market is consolidated and you should be avoided, okay. And you can see that here yourself, right? We can see that if we're just looking in this range, you can look at the price action there as just batting back and forth, but we can also see the shorter term, okay, and the longer term moving averages. They are flat. It's almost like they're wrapped up together, okay. They're almost like, as I said, they're looking like they're wrapped up together, and you can see for the price action there, it's consolidated. It's not really giving us any particular great direction. And so when we see those two groups of moving averages together and intertwined, well then, that market is consolidating. It's range bound. And so we want to avoid it, okay? If we're going to be predominantly sort of trend traders as new traders, well, when a market is messy like this, then, you just want to avoid it. And, I say this all the time when speaking to new traders is that, a good trend will leap off the chart at you, okay? If you find yourself as a completely new trader having to and ah, or a bit of sucking of teeth, is this a trend? Oh, I don't know. Or, is this a trend? I'm not sure. But let me tell you, if you're having to sort of, question yourself and doubt yourself, the likelihood is it's probably not a trend. Okay. Good trends leap off the chart. The challenge we have is that good trends don't come along as often as we would like. All right. Markets tend to only trend somewhere between maybe 20 to 30% of the time. 60 to 70% of the time, they're either consolidating or they're in transition. So what we want to do is when they are consolidating or in transition, we want to avoid those times. Okay. We want to go and find where new trends are. And this, as I say, is where the Guppy moving averages may help new traders, right? To help them identify when there is a trend, but also equally when markets aren't in a trend, when markets are actually just messy and intertwined. And the best thing you can do there as a trader is to avoid them, okay? Just avoid them. Go and find a chart that is working instead. So how do we trade with the moving averages. Okay, we can see them, we can see that they're pretty visual, but how do we actually trade them? Well, there are a couple of ways that you can do it. All right, but the simplest way is that traders will often trade in the direction of the longer term moving average group, and then use the shorter term group for trade signals. Okay, so what we can see here is that when we see all of the shorter group moving averages, okay, moving beneath the longer term group, well then we would be looking to be short that particular market. That's what we would be identifying. Excuse me. That's what we'd actually look to work with. There is also an opportunity, a particular setup is actually what we'd call like a trend bounce, is just a case of, when the shorter term moving averages move back to the longer term moving averages, but they don't cross, then this provides an opportunity to re-enter a strong trend. And what do I mean by that? Well, we can see here in this particular lower case example, prices moved above those kind of the longer term group of moving averages, and we actually see that the shorter term moving averages, they cross above, and we can see prices happily above there. But price comes back. Okay, price actually comes back, and you might be thinking initially, that either it's going to be a reversal, or perhaps it's going to be just into a consolidation. But actually, when we see that the moving averages come back to the shorter term ones, come back to the longer term ones, but they don't cross, okay, and price actually starts to break out again, well, then this is almost just like it's a bounce, okay? It's like a pullback in a new trend. And so if you have, maybe you'd missed the entry here, well, then actually suddenly we start to have an entry opportunity here as the new dominant trend re-exerts itself in its particular direction and strength. Okay, and that's what we're looking as an opportunity. So just looking for those trend bounces can be a very useful way for a trader to use the Guppy moving averages as a way to sort of re-enter a strong trend that is developing. And one of the other ways we can trade is Guppy is actually looking at reversals here. Okay, is that after a strong trend, when the shorter term GMA reverses and crosses the longer term moving average, this provides an entry into the new trend. And what we have here is, let's bring up the drawing tool, is that we can see price has actually been in, it was in a nice uptrend, okay, kind of just working its way north. And we knew that because we had the shorter term moving averages were above the longer term group of moving averages. And even though price came back here, it just literally, it bounced before it just kept going. But then what we saw is price started to come back into the sort of longer term moving averages. Then it actually went down and closed beneath it. And as you can see, we already had the kind of shorter term moving averages crossing the longer term moving averages, which was just helping us confirm that actually price was now moving down in a nice, stronger downtrend. So that's how we can use the Guppy moving averages to just help confirm that there is a reversal. And as I said, for new traders who are still just trying to get to grips, okay, still trying to understand when a reversal is happening and a market is transitioning from an uptrend to a downtrend, okay, or a downtrend to an uptrend, the kind of Guppy moving averages might just be able to help you with that, okay, as you build and develop your own analysis skills about trying to see what and how the market is actually developing as we look at it. So, here's an example here. This is the Australian dollar, okay, on the daily chart, and we can see at the far left, we actually had the longer term moving averages. They were all in a nice uptrend. They were all nicely played out like a fan, and the shorter group of moving averages was actually above the longer term. So you'd have been bullish there. But what we see here is, first we get a rejection candle, then we get a second rejection candle, and then we actually start to see, the short-term moving averages start to bunch up, and then actually we see price starting to go into the longer-term moving averages and cross beneath it. And along with that, you can hopefully see that the short-term moving averages, they all cross the longer term moving averages. So, we're looking to be short here. Okay. This is, we're looking to be recognize that, the market has transitioned from an uptrend to now a downtrend. And we're looking to see how can we actually, be short in that particular market. And what we actually see is the price here comes back. Okay, price comes back, and what's happening here is the sort of the longer term moving averages are transitioning as well. We see them sort of starting to curl up a bit, okay, before they start to fan out in the right direction. And what we have here is, it's a bit of a bounce. Prices come up to those longer term moving averages, but they've not crossed. The shorter term moving averages have not crossed back above the longer term moving averages. And actually what happens is we can see price starts to, put in those kind of new lows, and then we start to see the new downtrend re-exert itself in terms of its trend, and price is moving down very nicely. The short-term moving averages are beneath the long-term moving averages. The long-term moving averages are very nicely sort of fanning out. Okay, it's just confirming that we're in that shorter time. We're in a strong downtrend until we see price start to reverse here. Then price trades back up into the longer term moving averages. You can see price actually breaks out above that longer term moving average at the same time as we have had all the shorter term, Guppy moving averages moving now back above the kind of longer term group of moving averages. We've had a breakout, and now we know we're into a new uptrend there. So that's just over a period of a few months. So that's just a daily chart. We can see we've gone from from a bullish market to a reversal. The reversal has been confirmed when we've had the bounce. It's just confirming that we're in a shorter downtrend, and then invariably we get another final reversal and price reverts to its to an uptrend as well. And hopefully you can see that the kind of Guppy moving averages, they help just clarify that for you. They help just confirm it for you. And as I say, for new traders, that can be enormously helpful as a way and a means to just give them some confidence. Just give them some confidence and confirmation that the market is moving in the way that they are that their analysis is showing. So, in conclusion, ladies and gentlemen, moving averages, we know they're a popular trading tool for new traders. And the Guppy moving averages takes it almost like one step clearer, a step further into that. Is the Guppy moving averages are a collection of 12 exponential moving averages, including a shorter term group of 6 faster period EMAs and a longer term group of 6 slower period exponential moving averages. When the shorter term moving averages are above the longer period moving average, we define that as an uptrend, and we would look to be bullish. When the shorter term moving averages are below the longer period moving averages, we would define that as a downtrend, and we would look to be shorting that market. The Guppy moving averages, like all other moving averages, they work best in trending markets. Okay, when the Guppy moving averages are all close together and intertwined, okay, that market is going sideways, and you want to avoid it. So moving averages work best in trending markets, but can also be useful to trade reversals. And you can use bounces, okay, where price comes back to the longer term moving average, but actually the shorter term moving average, they don't cross. And then basically that bounce helps you to join stronger trends. So with that in mind, and for the last 10 minutes or so, I thought let's take a look at the charts, as it gives an opportunity to see and have an idea how they play out and how they are viewed on the actual charting package. Before that, okay, as always, if you want more support from us here on the Trading Spotlight team, well then, why not come and join the Trading Spotlight community here on Traders Yard. You can see the link at the bottom of the page, tradersyard.com/group/312. Myself, I'll be in here for the rest of the afternoon, and my colleagues, Marcus and Jens, are constantly posting some excellent material on there that you can get an opportunity to join us and see, have our own ideas and thoughts on the on analysis and trading the particular markets. And as always, don't forget to join us on next time. So we have Wednesday afternoon, we have my colleague Marcus, who will be here to talk to you about how to learn about candlesticks and trend, including using candlesticks patterns to identify trend reversals and continuations, trying to use them to identify strong versus weak trends, and how traders should trade strong versus weak trends. So that webinar is on Wednesday afternoon, 2 p.m. London time. You check your inbox for the webinar link, or you can watch it on either YouTube or, if you can go and sign up on the actual Admiral Markets website. As always, you'll find a lot of analysis and education and resources on the admiralmarkets.com website. And if you wish to contact us, if you're watching this later, then you can drop us an email at hello@admiralmarkets.com. You can watch this webinar and all of the other trading spotlights in the archive there on youtube.com/admiralmarkets and also on the facebook.com/admiralmarkets global group. So I hope you found that useful. I hope that's given you just a little bit more of an insight into what Guppy moving averages are and how you would look to view them on a particular market. What we'll do is, if you'll just bear with me for a moment, we'll switch across to the Admiral Markets MT4 platform and just take a little bit of a look at a few charts, just to help give you a bit of an idea of the how the concept itself stacks up for itself. So I hope you can all still well hear me, and I hope you can all see the screen. I'm sorry, but for some reason the video just doesn't seem to have worked today. For some reason the webcam doesn't particularly want to play ball, but I'm sure none of you will worry too much about missing out on seeing my ugly mug. Okay, we're here to look at charts. That's where the focus is. And what I have here is this is the Australian dollar, okay, Aussie dollar chart on a daily chart. And what I thought, but here, let's just move some of these around so we can draw, is we can just have a little look, and hopefully you can see here very clearly where it's helped define some particular trends for us. We can see that, just bring up the drawing tool, not unsurprisingly, we could see that here at the start of our area that we had a case where we had the shorter term moving averages beneath the longer term moving averages. The longer term moving averages were fanning out nicely. Can you see how they were just moving and fanning out nicely before we had a really quite a clear, significant drop there on the charts? Okay, we can see that and move, and then of course, as we've had the reversal, we've had a reversal carried on, but actually we can see that price was starting to go back into the moving averages and closing out, which was also confirmed to us when we started to see, as I say, the shorter term Guppy moving averages moving across the longer term moving averages. And hopefully what you can also see is that, as the Guppy longer term moving averages have been turning to confirm the new trend, what we've seen here is a couple of times is the shorter term price action and shorter term Guppy moving averages, they have returned back to the kind of the longer term moving averages. But what we've seen here is a couple of bounces, haven't we? Prices come back, bounced a couple of times, and now you can see we're in that strong uptrend. Okay, price is nice, making higher highs, higher lows. The shorter term moving averages are above the longer term moving averages, and they're also in nice alignment and fanning out there. So hopefully you can get an idea there and see just quite clearly, when markets are in good trends, it helps just confirm that, or when when new trends are starting, like we're seeing here, just being aware of those bounces occurring and happening, that can help us. Right, that can help identify where there's an opportunity that the new trend might be starting, and for new traders, that might just give you a little bit of confirmation, a little bit of confidence and self-belief that we're in a particularly new trend, and it's an opportunity for you to sort of trade in that particular direction. So that is pound against Aussie. I was looking at here. I thought let's have a little look at let's have a look at an intraday idea. So this is the dollar against the Swiss franc here, and it's kind of a bit of an interesting kind of an interesting one here. So, this is 15-minute chart, okay, and we can see here just the last week where, let's just use the drawing tool as always, where we had a bit, actually had a bit of a head and shoulders pattern anyway here, okay, reversal pattern. Even though the Guppy moving averages were above the longer term ones, we had a reversal price action, okay, pattern in terms of head and shoulders before price broke down beneath, okay. Price broke beneath the longer term moving averages, following by the shorter term moving averages, and we can see the price actually just collapsed there. The moving averages were fanning out. Price looked like it might be reversing, but actually it came back to the moving averages and then it bounced again. And you can see it did it a couple of times, okay? It did it a couple of times. And then, what we had was, we looked like here, this was just a bigger bounce because we had price, okay? We had price move across the longer term moving averages, and the first one or two of the shorter term Guppy moving averages had also crossed, but it didn't follow through, did it? You can see the sort of the rest of the shorter term moving averages didn't follow through. They didn't close or get above the longer term moving averages, and hence when we saw price, okay, back beneath the longer term moving averages, we can see price did drop there, and I just came in, and you can see that the longer term moving averages there, the longer term group of moving averages, was just basically helping it keep confirmed that it was just in a wearing its way down as a downtrend, okay. And it's only really today that we've seen, let's just draw up, where we had the kind of real final dip there, okay, this morning before price reversed and closed above the moving averages, and now we can see the shorter term Guppy moving averages are above the longer term, okay, Guppy moving averages, and then we can see that price has actually just been in a little bit of a trend. It did a little bit of a bounce there, okay, came back, it bounced, and it's moved up there itself. So that's just a bit of an example of on a shorter term intraday, and actually even on a intraday trade, there's invariably that's been building there up over like the last sort of 3 days or so of what's been occurring there. Let's have a look at what have we got here. Pound against dollar. Let's have a look. Yeah, pound against dollar. This is the 4-hour chart here, and just as a little bit of an aside to traders, what I did here is I've just basically you just insert the moving average, okay. You're just going to the moving average tool, and you just have to put them in, okay. Remember, the shorter term ones, okay, is the 3, the 5, the 8, the 10, the 12, the 15, and the longer term ones are the 30, the 35, the 40, the 45, the 50, 60. And I just put them in, and you can see I just put them in the different colors, okay. So I just have my shorter term here as blue, my longer term as brown, and then effectively what I was doing is then I once it was on here, I saved that as a template, okay, on MT4, saved it as a template, and as you can see, I have it there now. So whenever I open a chart, I can just basically overlay that onto it very quickly, very easily, and and you'll be able to sort of just makes it a little bit quicker and slicker rather than having to put in 12 moving averages every time you bring up a chart. But as you can see, here's the 4-hour chart on cable, and you can see at the left of the picture, we're in a downtrend, which is supported by the shorter term moving averages being beneath the longer term. They're nicely splayed out there, okay. Price comes back into the longer term moving averages, but it doesn't. It drops. It doesn't. We don't get price and the shorter term Guppy moving averages moving above the longer term. That doesn't happen till here. Okay, we can see that there. That's what happens. We have a real thrust up, and then what do we know? Price comes back down towards the moving averages. Okay, comes down here, but it actually price bounces at the area, doesn't it? It doesn't. We don't see the price and we don't see the Guppy moving averages coming out the other side. What we see is a bounce go on here, and you can see here. Let's just clear this. Once we start to get this kind of like bullish engulfing candle here, okay, good bullish close back up above the sort of shorter term Guppy moving averages, well then that's our indication to re-enter the trend. And you can see that basically that's what we've been doing for about the last week or so, or the last sort of 4 or 5 days, just grinding our way north. And that's just confirmed by the shorter term moving averages being back above the longer term moving averages. And as you can see there yourself, they're all starting to they're all starting to sort of just move out there. Okay, they're all starting to splay out. Okay, to fan out, and that's what we want to see. It just gives traders confirmation that we're in a trend, and this trend has some particular legs. Let's quickly, for the last minute or two, we'll have a little look at last one. So here's dollar yen, all right, and we can show this on the dollar on the daily chart, because remember what I was saying earlier is that we want this works best in trends, and if there isn't a trend, well then we don't really want to be involved in it. So, and we can see here the dollar yen is that just having had some of the kind of wild swings that we have seen here of the dollar yen, and then having been in a shorter term, kind of downtrend, we can see here at the moment price action and the moving averages they're all intertwined there, aren't they? That's you can see they're all intertwined there. Okay, price is almost price is almost constrained within the longer term group of moving averages. The shorter term group of moving averages are just entwined. Remember what I was saying is when you see this, okay, when you see this at this particular moment, well, then actually you don't particularly want to touch that at all, right? When a market is like that, it's like range bound, consolidating. You don't want to sort of be able to look at it. What you want to see is actually wait for it to break out, okay, whether that be to the upside or whether that be to the downside. What you're waiting to do is to see that break up. But right here, right now, at that moment on the dollar yen, there's actually nothing for you to do there. Okay, it's just a case of you just have to wait and see and wait for price to make its choice on which is the new direction or new trend that it wants to take. Don't try and forecast that. Don't try and predict that. Just let the market play its hand, and then you'll be in a position to follow that. And the Guppy moving averages will help, as I say, just confirm which direction we're going to be going in, and also whether that has particular legs as a trend. So there you go, ladies and gentlemen. Just a bit of a look through some live examples here on the charts. I hope you found that useful. I hope it's given you some food for thought. Okay, that you can take away and have a look at on your own particular trading. Okay, there's way, as I said, there's ways and means to use the Guppy moving averages. Okay, and as I said, if you're a new trader, it just might help you in terms of identifying a trend and being able to confirm that the trend is in place, or in fact a true proper reversal has actually occurred. So I wish you the best of success in your own trading. Remember, my colleague Marcus will be here on Wednesday. I'm going to be in the Traders Yard section this afternoon if you want to come and ask questions about Guppy moving averages or anything else. And until next time, I hope you have a great trading week, ladies and gentlemen. Thanks very much.